Hello traders out there in Traderland, my name is Dez here at Grok Trade. It's Thursday, January 6, 2011, and the market's in mix, but check this out. We have the Dow and the S&P down 0.2%, Russell's down almost a 0.5%, but in the face of all that, you have the NASDAQ actually up in the markets. We're up 0.3%, very bullish, and we had a significant drop here in the banks of 0.8%. Not overly great. Gold down, US dollar up again. And here we are looking at the S&P daily. We can see a red candlestick that we are down. We have virtually a double high here, and that could be a tweezer pattern. If we blow this up, we also have what's called a bearish Harami reversal pattern, and we really need to break through a lot of these resistance points. 1283 we need to blast through, and this upper trend line we need to blast through. We really do need to get over that, but I'm telling you, gang, if we drop below, I could see us drop below this trend line going into Friday, but I see a support area being at 1267. But we have a huge unemployment number coming out tomorrow pre-market by 1 hour. This would be a wonderful time to be hedged in the markets, because if that number comes out and disappoints, woe to this market, because we're so extended to the upside. We're overbought by the standards of many oscillators that are out there. If I blow this up, we have a negative tick on the histogram on the MACD already in the making. However, for the bulls out there that are perma bulls, and no matter what anybody says to you, you are bullish. Let me speak to you. NASDAQ's up. So if the NASDAQ's making these new highs, usually whatever the NASDAQ and the Russell's are doing now is what you can expect the Dow and the S&P doing. But here's the problem with that. If I go to the Russell's lost almost a 0.5% today. You can see that right here. So with that said, we have a mixed market. Don't try to be a bull or a bear going into major news like the unemployment rate that's coming out tomorrow pre-market. Very important that you're hedged or flat the market before that time, or at least if you are remaining long in this, make sure your stop losses are in place so you don't sustain any significant damage if in fact the markets decide to turn around due to that news event. Now, if you're a bear in this market right now, you are considered a gambler, because your opinion is the markets are going to go down. There's nothing showing that. We keep making higher highs, higher lows. We're in an uptrend. We're above all major moving averages. So to say that you're a bear right now you would just be too early. So don't be a gambler. Don't bet on your guess or what your opinion is. Continue to play what you see. And I see something going up, not going down. And if I really bring in a lot of data here, we've been going up for some time now. So just don't get suckered in. Sometimes we can get educated enough, we become very dangerous. And one of the most dangerous traders out there is one that's been trading a long time, that's had a good run of success, and has some education under their belt. And sometimes that confidence comes back to bite you. So there's me putting on the mentor hat again. If you didn't watch yesterday's video, I didn't get a lot of responses from that. Gang, you missed the boat. There's two key things you have to have to going into 2011 that you better have. And you can watch yesterday's video to get that data. And tonight, my little tidbit for you is making sure you're not trading what you think, but trading what you see. There you are. Have it. Grok Trade, your path to smarter and more educated trading.